The world doesn't belong to those who watch, but to those who dare to enter the arena. Today, you stop being a spectator and become the protagonist. Your moment is now.
I will say this is very, very interesting. It's an historic event. The very first international day trading expo. When I started in this industry 13 years ago, there were no teachers, there were no mentors.
I am the author of the best-selling Tools and Tactics for the Master Day Trader. I'm also co-founder of Pristine.com, which today is considered to be the premier educational resource for active self-directed traders. It was formed about 7 years ago in my basement apartment with one client. Today, 7 years later, Pristine has a worldwide following of 88,000 that spans over 62 different countries.
Señor Oliver Velez, bienvenido a Colombia de Noticias Caracol y gracias por estar con nosotros. Cuéntenos, por favor, en qué consiste el método Trade for Living que usted creó y que ha sido tan exitoso a nivel mundial.
Vi que uno de los mayores problemas que los corredores de bolsa tenían era la falta de entrenamiento y un monto apropiado de capital. Lo que hice fue crear un programa que se llama Trade for Life, que le permite a los corredores tener continuo entrenamiento cada día con fondos que yo proveo.
And then there's swing trading that I popularized all the way back in the early 1990s, a style that gained me great popularity over the years in the general public at large. This is the style I began to be known for in the 1990s. It's the one that some of the top-selling videos were based on and some of the top-selling books were based on. My approach, which became dubbed as swing trading.
We're talking about trading tips today with Oliver Velez.
We've experienced obviously one of the most volatile months in years. I don't believe we've experienced this level of volatility since, 2008, 2009.
At the greatest event of markets and trading in Spain, Oliver Velez, a legend of the trading, the rock star, the messiah of the trading. Do you feel comfortable with this nickname?
I actually do. As Al Jones calls me the messiah of trading all the way back in the year 2000.
Live from Orlando, Florida, I'm Adrian Manns for the Money Show Video Network. I'm here today with an old friend of mine, Oliver Velez. I've known you since, 1997, back when you were doing some heavy-duty trader education for new guys getting into the business.
I've been training and educating traders since 1994. I've spent the last several years throughout Latin America building a Latin American trading team. It's been a long road. It's been busy, but very, very successful.
I am responsible for labeling the style of trading called swing trading. So some people refer to me as the godfather of swing trading. So for instance, if you were to Google Oliver Velez swing trading, you will see some of my swing trading work all the way back to the middle or the beginning of the 1990s. How I came up with that term was I was doing the financial rounds, doing interviews on television programs and financial programs and things of that nature. One day during one of the interviews, I was explaining it and the interviewer said, well, sort of like, if it ain't got that swing, right, you don't take the trade. Is that it, Oliver? And I said, I like that. I'd like that if it ain't got that swing, which is basically taken from a very popular song. So from that day onward, I began calling my approach to the market swing trading, and it caught on. It caught on very widely, and then everyone basically started calling this style of marketplace swing trading.
Boom, boom, boom. Can you hear me now? Welcome. Welcome. Can you hear me now? Boom. Boom. I think you've got me now. Yes? Sound is good? Can you hear me? Got me now? Yes. Sound is good? Boom, boom, boom. Okay. Thank you, guys. Welcome. Welcome, finally. Welcome to another masterclass by Oliver Velez. My name is Oliver Velez, of course. All right. Thank you. Thank you. Guys, I'm extraordinarily happy to see you. I've missed you. I can't remember the last time we've had a masterclass, but maybe the last 2 months or so. But guys, as many of you know, because I've got the stats on who's attending here today. As many of you know, I like to do maybe 3, sometimes 4 major master classes every single year. These master classes sort of give me an opportunity, right, to share a little deeper with you than I normally can in obviously a 15 or 20-minute video. And I do spend a great deal of time every single day making sure that you get some small bite of something that can help elevate your level of sophistication as far as markets are concerned, as far as trading is concerned, as far as technique and tactic is concerned. But those can only come in small bite sizes, right? And while they have a benefit, they're not sort of like the big chunky pieces of knowledge that I can share with you. And so the master classes give me a more thorough opportunity, a longer period of time, because we'll be here for a few hours together, right? Longer period of time for me to share something a little deeper. And I can put something a little bit more holistic together. Now, it's not everything because, as we know, you can't cover everything as far as playing the markets at a very high level, even in a few hours. But it's certainly better than 10 or 15 or 20 minutes. So I get really excited about these things, guys. And I have something I think that's really powerful to share with you today. So come on in, guys, make yourselves comfortable. Grab the beverage of your choice. I've got some Colombian coffee here. All right. I hope you enjoyed the introductory video, guys. You saw the many different versions of OV. Yeah, gone through many different phases, guys. It's crazy. It's crazy. But come on in, guys. Listen, before I get started, my staff told me, Oliver, okay, so look, 60% of the people who are attending here today actually very thoroughly know who I am. So welcome. You're like my family. All right. Out of the 60%, 40% don't know who I am. All right. So welcome. Welcome to my world. 60% know exactly who I am and are somewhat familiar, are for the most part very familiar with me. 41%. So a big portion of the 60%, 41% actually are right here from YouTube. You're my YouTube family. You're my, you're my YouTube, you're my YouTube family. So welcome. Love to have you here, guys. Welcome. But I do want to know very specifically where you're piping in from. If I can just see that right. Give me your city, give me your state, give me your country, give me your town. I don't care. Let me know where you're coming from, and we will get started. I know that we tend to draw a very international audience from all over the world. And I love to see what parts of the world. Denmark, I see. Welcome, Denmark. All right, Wyoming, Paraguay. I love it. Norway, Trinidad. It'll start going so fast, guys, I can't even read this. U.S., of course, Germany, Georgia, Florida. Wow. Texas, Nashville. I love it. Atlanta. It's going by so fast, guys. I can't say India is in the house. Algeria is in the house. All right. Venezuela's in the house. Yeah, I love it. Woo! Spain is in the house. Colombia, of course. All throughout the United States, Maryland, New Zealand, Oregon. Wow, guys, New Jersey. All right. All right. Guys, you guys are from all over. So, good morning to some of you, good afternoon for some of you, and even close to good evening for some of you. All right, guys. So, let me start by saying this. Markets, listen to me carefully, people. Markets are driven in many cases by very repeatable cycles. And it always amazes me how so many people can miss these repeatable cycles, despite the fact that they are repetitive and they are, for the most part, very reliable. And despite their reliability, despite the repetitive nature of these cycles, the news cycle always misses it. Even many of the pros miss these repeatable cycles. And so I don't want you to have to miss these cycles. And I'm going to teach you a number of these cycles that will give you a very, very material edge on the market and on the vast majority of market players who are not aware of these cycles that drive certain market directions. A lot of people aren't aware of the fact that markets are driven by human nature, and human nature is very cyclical. All right. The two most dominant emotions that drive markets are obviously fear and greed. There's a third one that's sort of ambivalence. It's that stage in between your two broad emotional states. These emotional states constantly and very consistently create very repeatable market moves. So we know that fear drives markets down, greed drives markets up, ambivalence or uncertainty, all right, sort of cause choppy sideways market environments. So you have the three dominant states of the market, right? Bull, driven by greed, bear, driven by fear, and uncertainty, and sometimes ambivalence. Uncertainty is usually at the top of a market, can happen at the top of a market and at the bottom of a market. Ambivalence happens usually very much after an elongated market that does nothing after a crash. But these emotional cycles, fear, greed, uncertainty, ambivalence, fear, greed, uncertainty, ambivalence, that rotation creates very predictable market movements. And the most important thing that this cycle that repeats itself over and over again, fear, greed, uncertainty, ambivalence, repeat, fear, greed, uncertainty, ambivalence. This repetitive rotation creates very stark turning points in the market. And I am a trader I'm not a momentum trader. I am a turning point trader. There are two broad groups of successful traders. Not that momentum trading is bad, guys. Momentum trading is jumping on board something that has already been going on for quite a while. I like to catch the beginning of moves. I like to catch the beginning of change. I like to catch when a market is igniting into something brand new. That is what I teach you here on YouTube. That is what I focus with
every single day with my family of traders. We catch the ignition of certain things, and knowing these cycles will help give you an edge at capturing the beginning of change. All right? So get ready, grab the beverage of your choice, grab something to take notes with. We're going to get started. All right? I will do my best to take some of your questions, guys. But oftentimes I will not be able to take all of them because I don't want to shortchange you on what I prepared for you today. All right? I'm going to try to get this working. And I was having some difficulty with this before, but let's see if I can get this right. No. Give me a second here, guys. Let's see here. There we go. Got it. Yes. I got it. Now I also want to get my epic pen up here because I want to be able to draw for you in your faces. All right, it's important for me to be able to draw in your faces as well. All right. Okay, guys. Here we go. All right. So I've titled today's event, guys, the Q4 Trend Accelerator. What I want to try to do today, what I want to try to accomplish with you today is to get you prepared for what cyclically is going to happen as we move into the fourth quarter of this year. You see, guys, a lot of people don't understand that as much as 70% of all the market's activity is squeezed into the fourth quarter of every single year. Or said another way, guys, said another way, the fourth quarter is the most dynamic part of the year in most years, not every single year. But it also tends to be the most profitable quarter of the year for traders who know what they're doing. And so what a lot of traders do, what I want to try to make you do is to get you prepared to really hit the fourth quarter in a very big, profitable way. Not only from the short-term perspective, because we'll talk about both, but also from the more medium to long-term perspective as well. Not only from the income-generating approach to the market, but the wealth-generating approach to the market as well. I think you should marry those two. I don't think that a trader should choose between generating income and generating wealth from the market. Why choose? We do them both. And knowing about the fourth quarter and how that is the accelerator for traders and investors, I think is a very valuable thing. All right. So the fourth quarter trend, the accelerator, how to master this most dominant part of the year. Now, I'm going to skip the introductory stuff. You saw my introductory video. Most of you already know who I am. All right. But I do want you to follow me. Guys, if you, statistics have shown that as much as 60% of the people who watch my videos are not subscribed to the channel, please do that. Subscribe to the channel, hit the bell in the upper right-hand corner so that you don't miss a single piece of content that I put out there. It helps the algorithm share my message with like-minded traders like yourselves as well. So please do that for me. All right. The first thing I want to talk to you about is the whale. Okay. Now, this is a term that I have given to a period that covers one of the market's most repetitive cycles. I have given a name to this most repetitive cycle. And I have taught my traders that if you understand this repetitive cycle that I call whale, I have named this repetitive cycle the whale, okay? But when you understand this cycle, you understand almost the entire market. And you understand almost the entire market's characteristics, because all of the characteristics are built into this one repetitive cycle that I call the whale. All right. So we're gonna delve into this now. Now, the whale, this cycle is largely made up of three dominant parts, or spoken in marketing terms, it's three dominant moves, market moves that make up the entire whale. Now remember, I am calling this repetitive cycle a whale. All right. Now, why am I calling it a whale? Well, on Wall Street, almost everyone refers to things via animals for whatever reason. All right. We always used to joke on Wall Street, we don't like people very much, but we love animals. All right. And almost everything is spoken on Wall Street through animals. We call a rising market a bull market. That's an animal. We call a declining market a bear. We even talk about pigs, where the famous axiom is bulls make money, bears make money, pigs make none. That is a very famous Wall Street axiom. All right. The dog, we use dogs very frequently on Wall Street. The dogs of the Dow is a theory. Maybe I'll talk a little bit about that today, and how you can turn the dogs of the Dow into a fourth quarter money generator. That is a very powerful late year fourth quarter concept. Buying the dogs of the Dow. All right, the Dow Jones Industrial Average. And then cats. You often have heard me talk to you about the dead cat bounce phenomena, which is one of mine and my traders' bread and butter trading techniques. Tails, tail bars, tail bar events are major turning events. All right, so even parts of animals we talk about quite often, but it is the whales. All right, it is commonly referred to, a whale on Wall Street is commonly referred to a big player, a big institution, a big, massive player with a lot of money behind him. My version of a whale, I named the market's most dominant cycle, and I need you to understand this cycle. All right. Now, there are three types of whales that I want you to be very familiar with, and I put them in the order of which of their frequency. All right. So there's type 1. That type 1 whale happens more frequently than type 2. Type 2 happens more frequently than type 3, but they all happen, and I need you to be aware of all of them. Now, remember I told you that whales are made up of three movements in the market. So type 1 whale to the left, all right, is made up of three movements. The first movement is up, all right, and this works in reverse as well, guys. So the first movement is, understand why I can't draw on that. Give me a second here. Let me try, give me a second here, guys. Let me try to bring this up again. May not be able to draw for you today. Anyway, as you can see, there's the first leg to your left. Okay, the first leg to your left is to the upside. The second leg is a shorter leg that gets pulled down. That's in the middle of the leg. It gets pulled down. Okay, and then the third part of the leg, you resume what the first part of the leg started. So the first part of your whale is to the upside, okay? The second part of your whale is a little retracement against that first move. That's in the middle. You pull back. And then the third part that completes the whale is a resumed move to the upside. And that is your type 1. That is your most frequently recurring, that is your most frequently recurring. I don't know why I can't type for you here. Maybe I can do it here. Huh, no, it's not doing it. It's really weird. Can't draw for you today. Okay. Okay. This type 2 whale has your recess instead of after the first move up. So you have a surge to the upside. That's the first part of the whale, the bull whale, anyway. And then the second part, instead of pulling back down in price, you go sideways in the form of a stall. Okay, in the form of a stall. That's a sideways movement in the middle. Notice the sideways movement in the middle, and then a breakout in the third part of the whale to the upside that resumes what the first part of the whale started. Now, the key elements, guys, about a whale is that the initial move starts the whale. The middle part is what determines, after the initial move, the middle part is what determines which type you have. If after the initial move you drop some, that's type 1. If after the initial move you vacillate and go sideways for a while, that's type 2. So it's the middle part that determines what type of whale you're experiencing, okay? And then there's a third whale, a third type. This happens the least frequently, but I still want you to know it, and that is the very, very brief pause. So type 2, if you look at type 2, it's a lengthier pause. Type 3 is a very quick pause, maybe a color change, maybe it's a 2 or 3 bar pause, and boom, you resume right into the upper part of the whale. So these are the 3 types of bull whales. Now, here's a key, all right, which I can draw for you here. This 3-part cycle that I'm calling a whale happens both in micro time frames and macro time frames, the same 3 types of whales. So we can use this for income generation in a short-term trading time frame. We can also use this whale concept in a macro time frame to generate wealth, to generate big sweeping gains in the market, because this whale exists in both of those categories. And that's what I want to show you today. I want to show you this whale playing out in those 2 different time frames: micro for income, macro for wealth. All right. Let's move on here. I want to make you aware of the fact that cycles in the market have these pockets that I would call reversal times. All right. A reversal time, guys, in a market is when there is a high likelihood of the market reversing what it was doing, what it was just doing. That is what a reversal pocket time is. It's never a specific moment. It's a pocket, a small pocket of time. And these small pockets of time, when you know them in advance, my God, you are head and shoulders above the vast majority of market players who are not aware of these times that very consistently produce turns. So what is a reversal time frame? It is a pocket of time that tends to reverse or change in some way what was happening before the time arrived. So if a stock is rising into a pocket reversal time, that time is likely, boom, to cause a reversal back to the downside. If your item or stock has been dropping down into a pocket of reversal time, a reversal time pocket, it is highly likely that the stock stalls or turns and reverses that downward move. So the reversal times have a high propensity to change what was happening. Whatever was happening into that reversal time tends to get reversed or stalled in some way around these times. And I want you to know the times in advance, because when you know these reversal times, you can sit at the reversal time in advance, waiting and preparing to take advantage of the market's cyclical turns that happen at these specific times. And that's one of the great things that lead to masterful trading. Knowing probable odds of when something is going to change or reverse and preparing before that reversal happens. Okay? Here, we're going to talk about the micro reversal times, micro market turning points. Now, there are what I call major reversal times and minor reversal times. Okay, major and minor. Now, what I have in bold are your major time frames. So all time frames are Eastern time, by the way, guys. Eastern time, New York time. So 10 o'clock Eastern time is a major reversal time. I would say that of all the reversal times, this is likely the most dominant reversal time in the market. It's about 30 minutes or so after the market opens, and it is a major reversal time frame in the market. Okay? There's a high propensity for markets to change their nature in one way or another around this 10 o'clock period. Now, remember I told you that these reversal times are more like pockets. So sometimes it's a little bit before 10. Sometimes it's a little bit after 10. It's a pocket. It's a zone. It's a time area. Never be so precise where you say it has to turn exactly at 10. Oftentimes it does, but it can happen a little bit before or a little bit after. All right, 10:30 is a minor, and then you get to the next major, which is 11:30 or so. Sometimes it's a little before, sometimes it's a little bit after. There's no guarantee that your market's going to reverse or change at these times. We're talking about a high probability that it does, not a 100% guarantee. It's not 100%, but it happens frequently enough for you to be aware of it and to be waiting for the market to turn around these times, especially that 10 a.m. time. Now, we'll look at this over and over again today, okay? The 1:30 is a minor time reversal time frame, and then you go back to another major reversal time frame, which is around 2:30 Eastern time. There's a minor time frame, reversal time frame around 3, and then another in your last major reversal time frame that starts about the last 30 minutes of the market day. Right? 3:30. So what you'll see, if you run from 10 all the way to 3:30, you'll see that it alternates from major to minor, to major to minor, to major to minor, to major. The most major is 10 a.m. of all the majors. All right? 10 of all the majors. Now, in very powerful bull markets, that 3:30 reversal time, that 2:30 and 3:30 reversal time will be very important because the market starts to heat back up after it experiences a midday rest. Okay? My traders tend to dominate their trading activity in the first part of the day. So they're largely taking advantage of that 10 o'clock reversal time frame. All right. Late day traders will be focused on the 2:30 and 3:30 reversal time frames. So notice on the left-hand side of the chart, that's your early day reversal time frames. On the right-hand side of the chart, that's your late day reversal time frames. And in the middle of the day, you've got one minor reversal time frame around 1:30-ish or so. So the market is largely experiences bookends, right? It largely experiences bookends where the market has the opening period and then the closing period. Now, again, most of my traders focus on the first part of the trading day, and that would make the 10 o'clock reversal time the most important. Now, let's take a look at some examples here. Okay? One more time, I'm going to try. Guys, give me a second here. Let me try one more time. One more time here. Nope. Not working for me. All right. So, micro time frames. Now, what you're looking at, guys, you're looking at a micro chart, a micro trading, a 5-minute trading time frame. So my traders predominantly use 2-minute and 5 minutes for trading. All right, I think you're looking at you're looking at a 2-minute time frame here. So every bar represents 2 minutes of trading. Now, you're looking at you're looking at July 22nd. That was 2 days ago or 3 days ago, what have you. So you're looking at a chart that occurred this week. And if you look here, if you look at the July 22nd, if you look at July 22nd, you'll see the bar, the first bar of July 22nd, kind of coming off a flat 200 period moving average. That red moving average is a 200 period moving average. Now, if you followed my work for any period of time, you know that the two most dominant moving averages I will have on every single chart is a 20 period moving average, that is your blue line, and a 200 period moving average, both simple moving averages, that is your red line. And we look for moves off of these two moving averages. All right? Moves off of these two moving averages tend to statistically be the most dynamic moves you experience. So we see NVIDIA is experiencing its initial days, first bar of the day, July 22nd, a move off of the flat red 200 period moving average. Now, what I want to show you is the, this is a 5-minute chart. Good. It's a 5-minute chart, not a 2-minute chart. All right. So what you're looking at is the start of the day on July 22nd. Now, I want you to notice that for the first part of the morning Eastern time, you have a move to the upside. So you're starting from a low right near the 200 period moving average there, and then you're rising 5 minutes at a time. 5 minutes up, 5 minutes up, 5-minute pause, little red bar pause, another 5 minutes up. And I want you to note, all right, where the top occurs of that initial move off the open, right around 10 o'clock. Around 10 o'clock, which is your second red bar, don't know if you can see my cursor moving, but around the second red bar, we start to decline back. Okay, so what I'm trying to point out to you is that right from the start of the day, we kick off an up move right into 10 o'clock. That move topped out right at 10 o'clock and started to pull back. Okay, so we have a series of red bars pulling it back right at 10. Now, knowing if you're a trader of mine and you know this propensity for 10 a.m. to either stop, stall, or reverse whatever was happening before 10 a.m., if you're in that play, you want to sort of be out of that play right into the 10 o'clock rise, or at least out of the majority of it. All right? So knowing the 10 o'clock has a high probability of stopping, stalling, or even reversing what was happening before 10. If you're in a play, you want to be in it. If you're not in a play, you want to see if there's a possibility to take advantage of the 10 o'clock reversal itself. Now, let's go back to this chart. There's a lot here I want to share with you. Now, if you note, from 10 o'clock, we drop right into 10:30. And remember the time frames. We can go back here. Let me show you. Remember the time frames. 10 o'clock, okay? 10 o'clock first, and then the minor time frame is 10:30. So 10:30, why is one major and one minor? The minor doesn't happen as frequently as the major, but it can happen. It happens enough for you to be aware, just not enough, doesn't happen enough to be a major one, but frequently enough that I want you aware. I want you aware of the 10:30 sort of reversal time frame as well, because a lot of times your play will resume what it started in the beginning of your trading day. So it will stall out at 10, pull back, pause, and resume at 10:30. And that is exactly what you see here in NVIDIA. We start off the 200 period moving average, and we rally right into 10 o'clock. From 10, we take a break by pulling back, pulling back, pulling back, now going sideways, and going sideways. And right at 10:30, you can see the 10:35 price, the 10:35 time right here, right? The 10:35 time, boom. 10:30, bottom, 10:35, boom. We start our second leg to the upside. And we run right from that flat 20 period moving average all the way into around the next reversal time frame, which is around 11:15, 11:30. And so this is an example of how a trader can, in advance, using the cyclical reversal time frames to know what is probabilistically going to happen next. If a trader of mine took this buy off of the 200 period moving average in NVIDIA, and it's going up, 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 up right into 10 o'clock, he's going to be light or out of the play right into the 10 o'clock rise. All right? Some traders will reverse it and look for the short or the drop to the downside. Some will wait it out and to see if the 10:30 reversal time frame is going to resume the whale. Now remember what the whale is. Look at type 1 whale again. You have the left part of the whale is the initial move up, which you saw in NVIDIA. right into the 10 o'clock. The peak is around 10. Then it pulls back from 10 to 10:30. That's the bottom of the small drop. At 10:35, we start the next move to the upside. Boom! Into the latter part of the whale. Now, here's something I need you to take a note of. Write it down. Do it now. All right? The second part of the whale is often, not always, often bigger than the first part. I'm going to repeat that. The second part of the whale after the drop or after the pause, you don't always get a drop. Sometimes you get a pause. But after the drop or after the pause, if you resume that leg of the resume, that second run is typically bigger than the first run. Not always, a lot of times, okay? Now, let's go back to seeing the full whale. July 22nd, the first bar of the day rises off the 200-period moving average and runs right into 10 o'clock. At 10 o'clock, we reverse back to the downside, right into 10:30, 10:35. We break out and start surging above the 20-period moving average. And the second run to the upside is substantially bigger than the first run of the day, right into around the next reversal time, around 11:15 to 11:30. Remember, it's a pocket of time. It's not a specific time. It's around. It's a small range of time, a pocket of time. All right? This can give a trader an enormous edge, guys. An enormous edge. Okay? Now, let me take you to the next chart. We're looking at the same day, July 22nd, because I built this on July 22nd. I wanted you to have. I like to grab examples from recent history so that it doesn't appear like I'm going back in time and cherry picking anything like from the year 1980. No, I'm picking from when I made the slide for you. All right, basically. So Amazon, all right, the big giant red bar you have, first of all, I want you to note the two moving averages always. The blue line, 20-period moving average. The red line, 200-period moving average. I will not look at a chart unless I have these two moving averages superimposed on the chart, okay? Now, that first big giant red bar is the first bar, the first 5-minute bar of July 22nd. And it's a surge to the downside. All right? Now, it's an immediate drop to the downside, but I want you to go to 10 o'clock. Look at your time frames. Now, I want you to go to 10 o'clock. I want you to imagine that you're at the bottom of the drop. You're at the first green bar after that giant drop. You're at the first green bar after that giant drop, right? Now, you know the 10 o'clock reversal time in advance. If Amazon starts bouncing into 10 o'clock, it has a high likelihood of reversing back to the downside right around the 10 o'clock reversal time frame. Why to the downside? Because the first move was down. Do you understand? The first move is your key to what the second move is likely to be after the reversal time. I'm going to repeat that. The first move, if the first move is up, after the reversal time, the second move should be up. If the first move is down, All right? If the first move is down after a retrace or a move back to the upside, the reversal time should produce the second leg down. The first leg, the first move is your key to what the reversal time after the first move is likely to produce. Tell me you understand this before I move on. I want to see your faces. Do you understand this? I know we're on a delay. I know it's going to take like about 30 seconds, 40 seconds to see your responses here. But do you understand this? That the first leg, the first move, gives you advance notice of what the next reversal time is likely to produce for you. And you can prepare for that in advance. Do you understand that point? You understand? I see the yeses coming. Got it, got it, got it. Good. Guys, I want you to understand, but what I also want you to understand is how powerful this is. This is the closest thing you're going to get to reading the freaking future, going to the future before it happens and waiting there, waiting at 10 o'clock, waiting for the rise into 10 o'clock, waiting for the drop into 10 o'clock. So you see, in NVIDIA, we saw the drop into 10:30. We could have been preparing right there around 10:30. We saw NVIDIA's rise into 10 o'clock and then the drop. We can prepare for that. We can go to these reversal pocket timeframes in advance of the market getting there and wait there. This is the closest thing you will ever have to having a freaking, what is it called? What's the little ball we call where we read the future? Why am I going blank with that? Why am I going blank with that? Crystal ball, yes. It's the closest thing to having a crystal ball. Reversal times. These cyclical reversal times. You understand? It's very, very powerful. We often, as humans, Providence has not, God, nature, the universe has not saw fit to give human beings the ability to read very far into the future. I take that as a message that we're supposed to live the vast majority of our existences in the relative now. Because once we leave the relative now, we become terrible. We become extraordinarily inaccurate. Our accuracy is in the now. We don't have a high degree of accuracy in the future. This is why we can't see very far beyond our nose. You see, we can't see into the next city, but we can see right here. I can't see into the next year, but I can see into my day today. We have not been given the gift of reading or seeing very far into the future. Our accuracy relies in the now. If I were to ask you where you would be in the next 5 minutes, you would get that right every 5 minutes of your life. No matter at what point I asked you, you're in bed at the middle of the night, where are you going to be in the next 5 minutes? In my bed. If you're having breakfast and I ask you, where are you going to be in the next 5 minutes? You would get that right. I'm going to be right here. You would get that right every 5 minutes of your life. You are 100% accurate. I want you to think about that. You're accurate in the now, but if you start to stretch the now into the future, your accuracy starts to break down. So while you are 100% accurate 5 minutes at a time, if you took your life 5 minutes at a time, if you lived your life 5 minutes at a time, you'd live a life of certainty. But if I were to ask you, where are you going to be 5 years from now on this given day, at this moment, this time of day, you'd have absolutely no freaking idea. You'd get that wrong almost 100% of the time. So in the relative now, you're right 100% of the time. You stretch that relative now too far, and you're wrong almost every single time. What is life telling you? To live in the now. We have not been given the ability to live very far outside of the now. That's how I take that. And in the market, it's the same thing. I'm telling my traders all the time, you don't need the future to be successful. You need the now to be successful. You need to be able to read the now, but every now and then, life gives us these little special surprises, these little gifts. And I am telling you that what I'm sharing with you right now is one of life's gifts. That rare gift of being able to read the future. We don't have it generally, but we have it in small moments. And I am telling you, this 10 o'clock reversal time is freaking powerful. My traders make more money off that time. Well, there are two times. There's right off the open and the 10 o'clock reversal time. Those are the two most dominant money-making times for my traders. And so we have this special one-time gift, or few of them, where we can read the future. Not get it right 100% of the time, but the vast majority of the time. And you see it here, all right? You see it here. Now, let's go. Let me see here, guys. Here. So, Amazon drops starting from its first bar of the morning on July 22nd. It drops red bar, green bar. At that green bar, you know, okay, Amazon looks like it's now going to have at least a temporary retracement back to the upside. You go right to 10 o'clock or in the 10 o'clock area, 9:55, 10:05, in that pocket of time. Now, I want you to notice, look at 10 o'clock is exactly the top of the red. It's at the top of the green and the top of the red bar. Your 10 o'clock time frame is right when Amazon comes right into the declining 20-period moving average and gives you a red bar. Uh-oh. You see what I did there? Not only did Amazon rally right back to 10 and then change from green to red right at 10. It changed from green to red right at 10 and right at the declining 20-period moving average. You see what I did there? The combo. I want you to know these combos at reversal time frames. So the reversal is powerful all by itself. Green, 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 red, that's a reversal. All right, follow me for a minute. I'm gonna give you three things. So the reversal is powerful enough. Green bar, green bar, green bar, red bar, that's a reversal. A reversal at 10 is even more powerful than a reversal. Green bar, green bar, green bar, red reversal at 10, more powerful than the reversal by itself. That's three. Green bar, green bar, green bar, red reversal at the declining 20, boom, at 10 o'clock, boom. You've got three things: the reversal bar, red, at 10 o'clock, at the declining 20-period moving average, all at the same time. Guys, the power of this combo, it makes that reversal as close to a guarantee as you possibly can get. And many of my traders played this move all the way back to the downside. Now, remember what we talked about whales, right? But I taught you the whale concept from the bull side, but there's also the bear whale, which is made up of the same three moves. You drop first. So I taught it from the upside, but flip this upside down, guys. Okay? And you have the same thing in reverse. And I can show it. I can do it for you really fast here. Wish I had my pen available, but I can flip this upside down to show you the reverse. If I remember how to do this here. Right? Don't remember how to do this. Flip it this way. Anyway. It's this way, guys. Drop. Right? Rally. Boom. Right into your reversal time frame. And boom, you drop again. Boom. That's the bear reversal. All right? That's your bear whale. Initial move down, drop, temporary rally, right into a reversal time. But remember, in this scenario, right, we had that reversal time right at the peak of the move, but we also had it occurring right at a declining 20. So when you get that combo, you're moving up into a reversal time. Your stock turns right at the reversal time, and it turns at a declining 20-period moving average or at a flat 200-period moving average. Either one, I rely on them both. All right? Very, very powerful, guys. Very, very powerful. All right? Let me get back to... Maybe I'll just do it like this so I'll have at least something that I can write with here. So rallying back right into the reversal time, which also happens to be the declining 20-period moving average. And that reversal time is right there. Boom, right at 10 o'clock. Very, very powerful. Okay? Back to the downside. Beautiful. Now, let's take a look at Apple. Okay? So Apple here, we're looking at July 24th. Okay? The first bar is a power bar to the upside, right off the open. Okay? Power bar to the upside, right off the open. Boom. Okay? Around 10, let's go to 10 o'clock. I'm going to show you. Let's go to 10 o'clock. We're going to take this. What I can do, should do arrow better. Right around 10. Boom. So if you look carefully, guys, what you see is a pause right here. If you can see it, it's a pause. So what you have is this initial move up. Boom. Initial move up first. Pause and a continuation right out of 10 o'clock. Boom. And that, ladies and gentlemen, that is your type 3 whale. Pause and continue. All right? It's beautiful when you know the 3 types of whales and your reversal times. Okay? One more time. You've got the 3 types of whales. Type 1. Type 2 whale. Boom. Sideways. Boom. Sometimes when the sideways is shorter, it's type 3 whale, right? So, boom, boom. I like to do that more like a circle. That's what we have here. Rally here, pause. And boom. Right around 10 o'clock, you resume the up move. Right around 10. What gives you the key? What gives you the key of what the next leg is likely to be after the pause or after the brief pullback? What gives you the key that the next move is going to be up? If the first move was up, it will likely continue the up after the pullback or after the pause. That's the most likely scenario. I want you to know where the pullbacks and pauses tend to happen in a higher statistical manner, and that's around these reversal timeframes. All right. Let's move to, give me a second here. Here is another. Okay. We're looking at Microsoft on the 22nd again. First bar of the day drops hard, and you drop right into this low. From that low, you rally right into the 10 o'clock reversal time frame. Boom. And right from that 10 o'clock reversal time frame there, the rest is history. And that's your whale. That's your whale complete. That is boom, boom, 10 o'clock, boom. And I cannot impress upon you how repetitive this is over and over and over again. There are people who think we are pulling freaking rabbits out of a hat. It's just reversal time frames. The accuracy surprises people. It's just reversal time frames. It's reversal time frames. It's key moving averages. It's reversals at specific times, at or near specific items. Remember that trio. Reversal, 1, green to red, all right? So go green to red, but when is the red happening? Around the reversal time frame. And when is the turn and the reversal time frame happening? Where is it happening? That's it. At or near a key moving average. So get this together, guys, right? You got the price reversal, all right? Green, green, red, reversal. When at or near a reversal time frame, 10. Where at or near a key moving average. Woo! You put those 3 together, I am telling you, it will rain down manna from heaven. We do this every single day. Do you understand? Every day. Every day. Now, I know you guys are wondering, like, all right, Oliver, how does this play into with the fourth quarter? I'm getting there, but I need to teach you the foundation of whales first and key reversal timeframes. And I like to teach from the micro first, because when we go and I show you from the macro, you're going to be like, wow. Because the same phenomena that I'm teaching you that happens intraday, there is a macro 10 o'clock, for lack of a better phrase. There's a macro 10 o'clock that kicks off fourth quarter. Fourth quarter is the second leg. Do you follow what I'm saying here, guys? You see where I'm leading you to? I'm teaching you the macro, that there's a 10 a.m. reversal that you can milk the market for money for. But there's a macro 10 o'clock that you can milk the second leg of the year. The macro 10 o'clock reversal kicks off quarter 4. The same way the micro 10 o'clock kicks off the second leg, well, the macro 10 o'clock kicks off quarter 4. And I want you to be able to play them both. I want you to play the micro for income, and I want you to play the macro for massive wealth. We combine this singular concept in the 2 broad time frames, and OMG. You understand? OMG. Okay? They're all simple moving averages, guys. I have found in my 40 years of trading, I have found very little evidence that the sexier varieties of moving averages are any more powerful. Exponential, weighted, triangular. I've found no evidence that they're better. So I divert to all simple moving averages. You understand? But my key point that I'm skipping a little ahead to, this reversal time frame happens in the micro and the macro. The macro is the year. All right? And I want you to be prepared to take advantage of them both. All right? I'm a big believer in using the market for income and wealth, not choosing which one. Both. Okay? Let's get back, because we're building into something very powerful here. Very powerful. Okay. Okay, so we're still focusing a bit on the micro. We're going to move into the macro in just a bit, promise. Okay, let's take a look at, Meta. Same day, guys. These things did it the same day a lot. It is so prevalent. You're going to be surprised, guys. You're going to be surprised how prevalent this is, I promise you. So you're going to get, here's your first drop, boom, right into that low, boom, drop. Now, after that drop is around right into 950 or so. You're going to sit and wait around 10:05. You're going to sit right here. Before the market even bounces, you're going to know that the bounce into 10 is that 10 o'clock reversal time is likely to fail around that time. There's your 10 o'clock right there. And all you got to do is wait for red. All you got to do is wait for red. Green, green, red. If red is occurring around your reversal time, boom! Gotta love that. That's your strike. Now, notice how this one did not get back to the 20-period moving average like the last one did. Okay? This one didn't get back to the 20, but there's another moving average that I teach my traders, and that's the 8-period moving average. But that's a different topic. Just like you have major reversal time frames and minor reversal time frames, you have major moving averages and minor moving averages. The 8-period moving average is a minor moving average, and sometimes you get the reaction off the minor, not the major. All right? It's powerful stuff here. Powerful. Okay. Here it is on the bull side. Now, as you can see on MU, Micron, which is a very popular stock today, on the 21st, Micron gapped to the upside. So it gapped from the prior day's close to the upside right there, right? So it gapped up. Okay? And had a little tiny move to the upside. Not much, but a tiny move to the upside here, right? But look at the drop. Now, remember what I told you. Go to 10 o'clock or around the 10 o'clock area and you wait. I want you to wait right around this 10 o'clock area right there. There it is. Yeah. Sometimes a little bit before, sometimes a little bit afterwards. There it is. There's the 10 o'clock. I'm not lying to you here. Look at that. Here's 10 o'clock. Okay. As you're dropping, guys, as this stock is dropping from here, you're sitting at the 10 o'clock time frame before it gets there. You see? Starts settling down around 10. And boom. $10:30. You're on the move again. How crazy is that? 10:30. You're on the move again. That drop to the downside stops around 10, goes sideways, and kicks off the next move to the upside right at the next reversal time frame around 10:30. Guys, I am telling you, you are going to be amazed now that you have these times at how consistently things just stop or just turn right around these time frames. You're not going to believe it at first. Now that you're aware of it, you're going to just watch it from this point onward. You're going to be amazed. Be like, but why? Don't ask why. Just keep watching them happen over and over again. Build your confidence up. And then once your confidence up, start experimenting with them with plays. Color changes around the reversal time frames are powerful. Like, for instance, if you went back, right? If you went back to this if you went back to look at red, 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 red. When does it flip back to green? Right there. Boom. See? That's right around your reversal time frame. Red to green, right there. You grab the freaking bottom. And from there, the rest is history. It's crazy. It's crazy. My traders make the most of their day's gains right off the open. I always want you to be an open trader. That is my specialty. I want all of my traders to have that specialty. I want you to be able to make money instantly the first 5, 10, 15, 20 minutes of the trading day. Boom. Then, so a lot of people think we stop there. Not my traders, because I focus a lot on the open. That first 20 minutes of the trading day, I want you profitable. I want the first 20 minutes to be able to take care of your life. That is what I teach my traders. The first 20 minutes, I want you to be a 20-minute trader or less. I want the first 20 minutes of the trading day to be able to support your whole life. And I teach that a lot. Many of you who are on my YouTube channel and you're watching my content, I'm teaching you that first part of the open in the equity markets. That first part can take care of your life if you know what you're doing. You can support your whole life inside of 20 minutes if you know how to capture that first 20-minute dynamic time frame. What I'm teaching you now is the cherry on top. You understand? The 10 o'clock reversal time starts your phase 2. And it's damn super powerful. That 10 o'clock reversal throws you over the top. You supported your life in the first 20 minutes. Now the 10 o'clock reversal puts a cherry on top. All right? It's powerful. Okay, let's go back. We can go to, Oracle. Now, guys, I'm hoping I don't have to explain to you now. Look at the move up. Look at the first move up in Oracle on July 23rd. All right. So it started off the morning down, but look at the first move up into 10 o'clock. Remember, we're focusing on the 10 o'clock right now. So look at what happens here. So we open, we drop, we rally. It's still early in the morning. We're rallying. Green bar, green bar, green bar. When does your red bar happen? Right around 10. It's 9:50 or 10. Remember, guys, it doesn't have to be exactly spot on, but you're rallying right into that 10 o'clock area. And boom! The reversal is happening around the 10 o'clock reversal period. Now, look, you kind of go dormant or flat for a little bit after that 10 o'clock reversal. And when does it really kick off? Look at the time. Right around, you go green, 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 red. Look at where that is. Do I have to show you where that is? 10 o'clock. And the rest is freaking history. So that's the 10 top. Remember, you got the 10 o'clock top and 10:30 accelerated it, right? No, wrong thing. 10:30 accelerated it. Boom. 10:30. Powerful. So let me give you, guys, let me give you what a lot of my traders do. Remember I told you the market is sort of, the middle of the day has these bookends, the beginning of the day and the end of the day. The bookends are roughly 90 minutes. So 9:30 to 11 or so. And the latter bookend is 2:30 Eastern to the close at 4. Those are the bookends. So most traders make the majority of their money in the markets in the bookends. That first 90 minutes of the trading day, last 90 minutes of the trading day. Doesn't mean you can't make money in the middle. Because the middle tends to statistically be less dynamic, less trendy. The movements, as much as 65, 70% of the market's movements tend to happen in the bookends, right? Now, most of my traders focus on the first bookend, the first 90 minutes. And that first 90 minutes is broken up into 3 parts. You understand? And I'm teaching you the 3 parts here. It's the open to 10. That's part 1. All right? It's the 10 to 10:30, part 2. And the 10:30 to 11:15, part 3, done. Now, that's the 3 parts of the first bookend. You understand? And I want my traders, so what I teach my traders to do, we focus on the first 20 minutes, that first move into 10, I want that taking care of your life. I want you to get so good at that period that your whole life is supported by that one. I want the extra to come at the 10 o'clock reversal and sometimes the 10:30 reversal. You put these 3 together, it's freaking awesome. Now, how many people really know what I'm teaching you here today? I want you to think about that. What percentage of people out there with a Robinhood account know exactly what I've shared with you here today? Give me your guess. What percentage? What percentage of people are consciously, oh, we're coming across the 10 o'clock reversal time frame? What percentage? You tell me. What do you think? I see 5%, 5%. You're about right. 2%, anywhere in there. So it's small. And if they do, they've come across me. I've been teaching this for 30 something years, right? So I say that to make you understand that you have already been made rare. You have already put yourself in the top 5% of the market by knowing what I'm teaching you here today. And I promise you, it is going, the accuracy of this, the consistency is going to blow you away starting today. If you do not let it go, if you stay focused on it, if you watch these times every single day, you are going to be blown away. I promise you. You're going to sit for hours at a time trying to figure out, but why is it so accurate? Forget why. It just is. It just is. All right, let's get back. Freaking love it, man. I love it. Okay. All right. Uh-oh, here's Uber. Let's go take an Uber, guys. Let's take an Uber, shall we? Okay. July 21st. Now, look at the move up, guys. I want you to look at the, we're focused on 10 o'clock, right? Go to 10 o'clock. Go to 10 o'clock. Do it right now. You have, put a circle on it. You know how to do this? I do the shape, put an arrow. How's that? All right. Go to 10 o'clock. There's 9:45. There's 9:55. Here's 10 o'clock right there. Oh, here it is. 10 o'clock. That's 10:05. 10 o'clock is right there. Look at that. Now, that's 10 o'clock we're pointing to. It's crazy, right? Look at this. 10 o'clock. Now, guys, remember that combo I told you? All right. 10 o'clock and at or, so when 10 o'clock, where at or near a 20 or 200 or an 8. That was a little bonus today, or an 8-period moving average. So when 10 o'clock, where at the 20, at or near the 20, or at or near the 200, or at or near the 8. That makes it powerful. You don't need all three. You just need the reversal and the time, and that's it. But if you get the where at or near the 20, the 200, or the 8, oh my. It's just, it's crazy. You can stack those three together. And here, that's what we're doing. We're stacking, baby. We're stacking. You don't have to touch it, just be near it. There's your 10 o'clock peak. There is your at or near the 200-period moving average. And boom, here is your signal. All you need is the reversal. Boom! And the rest is history. No? Gotta love that sound. Let's do it again. Gotta love that sound. Okay. Beautiful. All right. Last one on the micro, guys. Last one on the micro here. I'm going to show you. Go to 10 o'clock. You're down here. And you see green start to happen. Now, green is happening around 9:45. What you're going to do is you're going to go wait around 10 before the price gets there. So you're going to wait right around 10.
And no, that's likely the area it's going to stop, especially since 10 coincides with the 20-period moving average. So that move up moves right into 10 and right into the 20-period moving average at the same time, and your stock just goes dormant. So I guess, guys, in a way, right, reversal, I'm still going to keep the term reversal time. It's, in a way, it's too strong. Reversal is too strong a word because it really is more like change. So change can just be, it just stops going up. It doesn't go down, it doesn't reverse, but it doesn't go up anymore either. So 10 o'clock can stop your stock and doesn't necessarily mean it's going to reverse your stock. Sometimes it reverses, sometimes it just stops it. Understand? So that is why I say sometimes reversal is too strong a word. Change is really a better word, although reversal is catchier. So I'm going to keep the catchier one because I want whatever can capture your attention more, and that's what I'm going to opt for. And reversal captures your attention more. But it's not always a reversal at 10. Sometimes it's just a change. All right? All right. So that taught you the power of largely the 10 o'clock reversal. And I am telling you guys, if we were to stop here and you're an income producing trader, this 10 o'clock reversal concept is going to reward you for the rest of your living days as a trader, for the rest of your life, I promise you. And it will, I've been doing this for 40 years. It still surprises me. The accuracy of this still blows me away. And I'm into this decades, guys. To this very day, I'm always like, wow, did you? And I'm always pointing out to my traders, did you guys catch that 10 o'clock reversal in WWXYZ? You guys saw it? How many got that one? It's going to reward you forever. This is not something that's going to wear out. It's not something that's going to stop working at some point in the future. Never. It has been as consistent 40 years ago, consistent today as it was 40 years ago. All right? I don't teach you things that disappear at some point in the future. That means they weren't real. I teach you real things that stay forever. Okay? Now, what I decided to do was to teach you these reversal time frames from the micro first before we went to the macro. A lot of times you can see it. If you can see it from the micro, you can see it from the macro. All right, so let's go to the macro now and talk about the macro reversal time frames. Now, there are a couple things I need you to be aware of first before we look at charts, right? The best and worst times of the year. And this depends on, this is spoken from the point of view that long is good. I mean, green is good and red is bad. As traders, guys, we don't have that mentality, right? For us, red is just as good as green from a trading perspective. In fact, red has the edge over green because markets fall harder and faster than they rise. So I prefer a declining market when it comes to short-term profit making in the market because my gains come faster and harder in a down market. They come slower and less powerful on the upside, except rare market environments. I mean, we just got off of a market environment where it was very powerful to the upside. I get it. But generally, statistically, over long periods of time, your down markets are more profitable for a trader not an investor, a trader, your down markets are more profitable than up markets by a few percentages. So for us, down is not necessarily bad and good is not necessarily up. All of it's good. So I'm speaking from the more traditional retail mindset here, all right, when I tell you best and worst times of the year. So if we take the retail concept, October through December, sometimes spilling over into January, represents statistically the most bullish part of the year. That's your fourth quarter. That is what this event is about. Your fourth quarter. This is quarter four. All right? So quarter four. Okay? Boom. That's that is why the fourth quarter is so important to understand and know, especially the fourth quarter of an election term. So there's fourth quarters, and then there's fourth quarters of election years, midterms. That's very powerful. And so you have the midterm fourth quarter, and you also have the presidential fourth quarter. So there's the presidential fourth quarter every 4 years, and then there's the midterm fourth quarter every 4 years. And it's freaking damn powerful. The fourth quarter by itself is powerful. You add the fourth quarter and an election year, whether it's midterms or presidential election year in the States, it's super powerful. Okay? Now, the fourth quarter is typically a turning point for the market. It will turn to the upside, or what a lot of people fail to realize is the fourth quarter can turn to the downside. It always depends on what was happening before the fourth quarter. So if you were rallying into the fourth quarter is going to turn to the downside. If you were dropping into the fourth quarter is going to turn the market to the upside. This is so important, guys. I got it. Just indulge me. I know you understood, but just a few of you, where's my cursor? A few of you guys, let me know. Let me know you understand that. These periods that I'm telling you about are not really directional periods. They're turning periods. So it depends on what happens before the period. Just like 10 o'clock. If you're rallying into 10 o'clock, the turn to the downside is likely. If you're dropping into 10 o'clock, the turn to the upside is likely. Same thing with fourth quarter. If you rally into fourth quarter, the turn is typically down in the fourth quarter. If you drop into fourth quarter, the turn is typically up in the fourth quarter. Tell me you understand that. Got it? A few of you let me know. Yeah, got it? Yes, I'm seeing the yeses. Amazing, right? Just knowing this statistical anomaly, knowing this, it's not right every year. Nothing in life is going to be 100%, guys. But I'm talking 80% of the time, 75% of the time. That's like 7 to 8 times out of every 10. That's all you need to get fabulously wealthy at this, is to be right 7, 8 times out of every 10 times. You're going to get this right. You're going to get the most dynamic. Now, if the fourth quarter is not necessarily up or down, it does have a statistical edge for being up, though, by the way, guys. But it's not always up. All right? Not always. Sometimes the fourth quarter is down. What makes the fourth quarter special? Because whether it's up or down, it's freaking dynamic up or down. It's dynamically up or down. You make a lot of money in that direction. You understand? It's one of the most dynamic periods of the year. And there's a lot of reasons that go into why quarter four is so powerful. And a lot of it is institutional rotation. It's closing out the year phenomena. It's what we call the window dressing period of the year for hedge funds and mutual funds and money management firms and, so forth and so on. So there's a lot of reasons why this fourth quarter of the year is so dynamic. But those reasons aren't important as long as you know what to get yourself prepared for. So if we're rallying into fourth quarter, get yourself prepared for down. If we're dropping into fourth quarter, get yourself prepared for powerful up. So remember I told you that there's this 10 o'clock. We know the 10 o'clock in the micro. There's a 10 o'clock in the macro, for lack of a better term. And that is September, October. September, October. It's really kind of August, September, first part of October. Because remember, if you go wide, the pocket of time gets wider too. So it's kind of like August, September, October. It's middle of August to middle of October, that pocket of time. Write that down, note that down. It's middle of August to middle of October. That's the 10 o'clock reversal for the macro. And if you've been dropping into that, you're going to rally fourth quarter. If you have been rallying into that, you're going to drop fourth quarter. So I need you to understand that pocket. That's the macro 10 o'clock, right? Okay, let's get back. It's powerful, guys. It's powerful. Okay. All right, so I want to show you something here. Oh, wait, I didn't finish telling you this. I didn't finish talking about this. May, guys, is one of your most bullish months of the year statistically. All right. So, guys, it's actually May, June, into June, not the full month of June, but it's May into June. So, guys, oftentimes, if you rally, the same thing, if you rally into May, June, the next period's down. You understand? If you drop into August, got the wrong signal. If you drop into August, October, right? If you drop into August, October, boom, the fourth quarter is up. So, May is statistically one of your more bullish months of the year. September is statistically one of your most bearish months of the year. So what I'm showing you on this chart, guys, is I'm showing you periods and individual months. So statistically, the most bullish, powerful, when you're bullish in the fourth quarter, it's very bullish. When you are bullish in May, it's usually very bullish. August through the very first part of October tends to statistically be one of the most bearish periods of the year. And September etches out almost all months for being the most negative month of the year. It's important. It's good to know these things. It doesn't happen every year, but it's good to know what statistically is your reality for these pockets of times and these specific months, so that you can anticipate in a way what is likely to be next around these times. So if we take a look at Micron, all right? Now, I want you to go to the far left-hand side of the chart. I want you to take a look at this. I'm going to get an arrow here for you, right? Now, look at your months. Look at you're in June here. You're in June. So you've come from here, right? Boom. You're in June. You're in August. And look at what begins to happen. If you have been, September oftentimes will put in the change. September going into October will put in the change. Oftentimes. All right. So what you have here is a period where there was this is what the market was doing. And right into September, boom, you start that in September, right? Let me see if I can grab this here. Why can't I grab this? It's too narrow. Here we go. All right. Right into September, you start the change, right? So September. Now, I want you to look at the move in the following year, this year. If you run up, remember the May through June, if you run up into May, June, look, May, June, you're going to turn in the middle part of the year. You're going to turn back to the downside a lot of times, not 100% of the time. So remember what I taught you. If you are rallying into May, June, you're going this way in the middle of the year. You see? If you are dropping into May, June, you're going the opposite way in the middle of the year. So not every time, a lot of the times. So what you have with MU is you're rallying into May, June. And here's what you're experiencing now in the middle of the year. Okay? And that's what I want you to understand. Now, if you are rallying into September, fourth quarter is down. Take a look again. If you are declining into September, fourth quarter is up. So you are rallying into September. You top out here, but you also have some strength here, right? Retesting the top. Into September, fourth quarter is down and then some. So you top out around in the fourth quarter and it's largely down. So remember I was telling you that everything is predicated on what is happening before these potential turning pockets of time. Rally into fourth quarter is likely down. Drop into fourth quarter, drop August, drop September, fourth quarter is likely up. Very important. And you can get yourself prepared for this. All right. And guys, as frequently as this happens, the number of times it's forgotten and the number of times it surprises people is amazing. I don't let you be surprised by this stuff. All right. Look at Oracle. You rally. Look at that. You are rallying. Rallying right into September. If you rally into September, get ready. Fourth quarter, guys. You rally into September. Let me get this right again. Fourth quarter is likely down and then some. And look at where Oracle bottoms right at the 200. And look at where it rallies. It rallies right and tops out when? When does it top out, guys? What month do you think that is? Remember your months? That's May, right there. Crazy. Strong into September. October equals fourth quarter down. All right. Strong into September equals strong into September. Look, up, right into September. Fourth quarter down. Boom. September-ish. One more time. One more time. I know you do. Just a few of you indulge me. All right? Just a few of you indulge me. September is your 10 o'clock. September-ish is your 10 o'clock on the macro. Rally into that, baby. You're going down months. Drop into that, baby. You're going up months most of the time. Tell me you understand this. I am preparing you for what is likely going to be, if you do this right, the best quarter of your life. I have taught you how to take advantage of this every single day. Now I'm teaching you how to take advantage of it every freaking year for big money. We're going to milk this every day and in a big way every year. Every year. Understand how powerful this is? You put the two together. Whoo! And I'm showing it to you over and over and over again. This is not something that just happens this happens most of the time. And especially, once again, during election time. All right? Wow. Okay. Good. I'm glad you guys are picking up what I'm laying down here. Okay. Take a look at this is QCOM this year. Look at the rally, guys. Look at the rally. Look at that. Where do you top out? What month do you think that is? This late in the presentation, you should know that's May. That's where that term sell in May, go away. It's really kind of sell in late May, early June, go away. But yeah. If you rally into May, you're going down in the summer. Most of the time. You'll always find exceptions, guys. Just don't, everybody wants to show me the exception, right? Well, Oliver, it didn't do it here. I'm like, okay, but it did it these 40 times. You want to show me one? Oh, well, Oliver, take a look at over there. It failed. Okay, that's one. I can show you 20 that didn't. right? Everybody likes to point out the, but this one, but that one, that. Guys, I'm not interested in the small. I'm interested in the big. What happens big most of the time? That's what we have to play, because we will never find something that is 100% across the board. There are always exceptions. I think I have an exception here, which I think is Apple, right? I mean, it's kind of an exception, Apple here, which we'll get to. But guys, look at Dell. Look at Dell's huge run up, right? So it rallies into September, October, has this bad period. Guys, this is a bad period. It doesn't look like it because of the up move, but that's a bad period. And then it starts moving again right into, what month do you think that is? Yes, you guessed it again. That is May. Now, it's not dropping a lot, but remember, you can get the change this way. And if it keeps doing this into September, you know what's next, right? What is likely next? That is your type 2 whale. So what you're getting here is potentially type 1. What you're getting here is potentially type 2 whale. The fourth quarter is strong to the upside if this continues like this. All right. Okay, Google rallies right into
I can help with this.
I'm not talking to you. I hate when AI starts talking to me and I wasn't talking to it. I'm talking to you. All right. Rally right into May. And now we're dropping to the downside in the middle of the year. Not a surprise. So, guys, we as a group did a lot of kind of shorting in this Mayish, early June-ish area, especially the AI stocks. Now, if you remember a master class I did late year last year, 2025. All right. I told you in that master class that I was expecting a huge run up right into mid-year, Mayish, June-ish, and then a tapering off. Now, if you go back to that master class, that's what I prepared you for. I was just preparing you for the run up into May, June. And boy, did we get one, especially in the AI category, right? The MUs, the AMDs, and the NVIDIAs. Whoa, very powerful. But now you sort of also understand the timing around that and why I said into mid-year, into the early part of mid-year, or right before mid-year, I should say, May, June. That's your statistical turn. All right. But the next statistical turn is September-ish. And so now you have the ability to get prepared for this. And I've created something actually to help you get prepared for it so that you don't leave anything to chance, which I'll talk about in just a little bit here. But okay. This was the exception, kind of, guys, where this is Apple. So you see the run up in May, into May, and the pullback, but you see the run up into May, and you top out temporarily But then, so it does top out in May, right into June, and we go right back up. So that May drop, we're right back up. Now, here's the key. If Apple stays strong right into September, you know what fourth quarter is, right? That's what I'm trying to teach you. How to get yourself prepared for fourth quarter. Now, some traders might ask, well, Oliver, what about the periods before this fourth quarter? Well, they tend to be kind of erratic. That is why I wanted you to have the everyday phenomena. Every day never goes away. We play that 10 o'clock reversal. We play that open every day. We play that 10 o'clock reversal every day. Boom. We're doing that every day. I'm talking about when you do it massively and big for the wealth part comes at the turn for fourth quarter. That's where big money can be made. So I always want you having both in your arsenal. All right. Today, I would say 95% of my capital is in the big money side. 5% is in the trading everyday side. When I first started my career, 95% was in the day-to-day side, and 5% was in the larger wealth side. But over time, it completely flips. All right. But I still trade every single day with my traders, with you. Still trade every single day. I will never stop that. There will be on my epitaph when I finally go to my maker. You know what's going to be on the epitaph? On his final day, he placed a trade. Oh yeah. I'm going to trade until I drop. Why not? I freaking love it. It's fun and it's profitable. All right. Okay. Guys, even with Bitcoin, this is a weekly chart of Bitcoin. Now, I don't know why I don't have the 20-period moving average on here, but I do have, guys, the weekly 200, which I think is extraordinarily important for everything, is even Bitcoin. Now, I want you to go here. Take a look at this. I want you to go to September. Look, if this is July, you're dropping. Where do you think that point is? September. See the September? There you are, September, right? If you're dropping into September, guys, if you're dropping into September, that's your macro 10 o'clock. All right? And see it? Okay, now look at the next year. You're dropping. Where do you think that bottom is, right? Right in here. So you're dropping next year. You're drifting. There's your fourth quarter. Crazy, right? All right. But look at the next year. You're rallying. into September. Do you see that? You were freaking rallying last year. And you topped. Look at fourth quarter. So I hope you see this phenomena very clearly. Drop. Rally. And you see what's next. Now, here's what's really fascinating. Guys, this is what's mouth-watering to me, right? I'm going to show you what is freaking mouth-watering to me. I'll show it to you. Saliva falls down the corner of my mouth. Look at this. I want you to pay attention. All right? Get a napkin. Saliva is going to start. You're going to see. Look at the 200 period moving average. When was the last time Bitcoin was hovering around the weekly 200 period moving average? It was down here, right? See that? Now, when did it start strength from around the 200 and leave the 200 in the dust? When did that start? When did that start? When did it start? What month do you think that is? September. And the rest is freaking history off the 200. Where are you now? Again, around the 200. What month are we in? July. Same thing over here. When is this likely to start really showing its strength? Right over here. Are you picking up what I'm laying down here, guys? Are you picking up what I'm laying down here? Tell me if you understand this. I got to see your faces. You got it? One more time, guys. One more time. Do it for me. You see this? You see this shit? It's freaking crazy. I am handing this to you with a freaking bow on it. It's crazy. I'm handing it to you with a freaking bow on it. I want royalties. Let me wet my beak. I want portion of the profits you're going to make from this. It's crazy, right? Guys, I'm telling you, this is going to blow your mind forever. It still blows my mind. The hairs on the back of my neck still go up. And I've been doing this for decades. It's crazy, crazy. So I hope you understand how powerful these cycles are. Don't let anyone talk you out of, oh, cycles. The market doesn't know cycles. Oh, yes, it does. The market doesn't know technical analysis. Oh, yes, it does. Knows it better than you. Cycles are real and they're powerful. They work in every aspect of life, from nature to plant, the plant world to the sea world to weather to human body to emotions to markets. And knowing the cycles is one of the keys to taking advantage of the small number of times in life we have the ability to read the future. I talked to you about the fact that Providence has not blessed us with the ability to frequently and constantly see into the future, but cycles every now and then deliver that ability to us. That 10 o'clock cycle intraday and the macro 10 o'clock around September. Now, you mark my words. You watch this happen. Watch it. But you're going to have a choice. You can either just sit there and watch what I just taught you happen and say, wow, Oliver, that's amazing. Or you can watch and take advantage of it. And that's what I want to help you do. I want to help you take advantage of the 10 o'clock every single day reversal. I also want to help you take advantage of the wealth one that happens around September-ish into and all of fourth quarter. This can be a very, very powerful year, rest of the year. But we have time to get prepared for this late year phenomena. That's what I want to help you do here, guys. So let me just do this. It's very powerful what we covered today. By the way, this we get back to this Bitcoin thing. You want to be really alert around the September-ish time frame. Okay, you want to be really alert. And the longer term time frame is telling you the same thing. Look at the 20-period moving average on this time frame, right? For Bitcoin. So I want you to note how every time you pull back near the 20, you don't have to touch it, you're off to the races, right? You pull back toward this 20, you're off to the races, right? Pull back, you're off to the races. Now look at where you are. Look at this. Do you see this? I say that's right into September-ish, near that 20 over here. You're about to freaking take off here, guys. You know, so you add that with that 20 on the really macro time frame, with that 200 on the weekly, and the September-ish thing I spoke to you, and the fourth quarter phenomena. Are you freaking kidding me? Saliva. You can sit there and watch me, root me on. Oh, Oliver, yeah, he was right. Yeah. Or you can participate, right? You want to be a spectator in the fans? Oh, Oliver was right again. Yeah. Or you want to be with me on the field. I say be with me on the field, guys. Let's go. Let's do this. All right. Let's do this, guys. The Summer Accelerator mid-year sale. I want you part of the family. I know many of you are part of the YouTube family. Let's take the next step and go to inside of the trading family, guys. If you have valued my work in these master classes, if you have valued my work with the little snippets that I share with you in my YouTube videos, guys, can you imagine being inside on the other side of the window, on the other side of the curtain, every single day? This is crazy, guys. It's time. It's time to do it. Stop thinking, stop guessing. What is your try to do something that will make sure you are not the same you at the end of the year. That's the key. Don't be the same you at the end of the year. Don't have the same money at the end of the year. Don't have the same opportunity or lack thereof by the end of the year. Most people are going to be the same or even worse by the end of the year. Do something that will reverse that. All right? I've taught you how to make the end of the year better than it is right now. I've taught you how to make every day better with the 10 o'clock reversal concept. There are two ways to arrive at quarter four. The same way you arrived at the last one. How did you arrive at last quarter? Last fourth quarter. What's happened since then? Let's stop that. You can be fully prepared to accelerate your results here, guys. We have a huge opportunity. Now, remember when I told you that fourth quarters are very powerful, big money making period of the year. But when it's an election, when that fourth quarter falls in an election year, it's like 2 times the power. You don't want to miss this one. I'm telling you, you don't want to miss this one, guys. All right? Every season, I see you here, you postpone your growth, you enter the next one as the same trader. You guys stay the same way, doing the same thing, making the same mistakes. When are we going to stop that? Let's stop that. I want to be your mentor for life. I want to transfer everything that I know to you. And I have selfish incentives for that too. But I want you part of the team. We do this together. Now, guys, I have a sale. Most of you may know that I have a Black Friday sale. But so many people wait and beg me, Oliver, I don't want to wait until the end of the year. Well, now I have the mid-year sale. And these are the retail prices. Now, that's not what you're going to pay for any of these programs. But my programs are divided into these 3 categories. The short-term income producing, where you have the complete trader for life, the live trading camp. That's my baby, the live trading camp. That's my baby. All of this is mine, but my real baby is the live trading camp, that's where I teach you the earning your whole life in 20 minutes, the first 20 minutes of the trading day. My God, do I love that. That is my specialty, right? That's my specialty, that live trading camp right there. All right, but you got to have the complete trader to get the live trading camp, but that's the one where we're focused on the first 20 minutes of the trading day. What we talked about today is that second part, the 10 o'clock reversal that happens after that period. But anyway, my programs are divided into the short-term oriented trading side. Then there's the swing trading side, which we do via the Forex market mostly. We day trade there too, but the big plays are on the swing trading side and the Forex side. And then there's the wealth side, the long-term investing. We focused a little bit on that today, that fourth quarter, taking advantage of that with Bitcoin and certain key stocks we want to focus on to maximize the fourth quarter. Guys, if you really want to maximize the fourth quarter, you're looking at these things in the lower quadrant, that long-term investment category. It's big money, big money. Now, these prices, I want you to ignore them because today I'm giving you up to 70% off of these because it's the mid-year. And I'm trying to motivate you to do this so that by the end of this year, man, you are orders of magnitude higher than you are today. We got time to prepare for this. So up to 70% off, guys, until August 2nd. The complete trader, guys, this is where I want the majority of you, to be honest with you. Complete trader in the live trading camp, right there. You start there. Give me that. Join me there. Join me in that Complete Trader live trading camp. Get that package. That's the package. I think this is the package for it, right? You get them both right here. Come to me right here, guys. Just do it. Come to me right there. Guys, one price forever. Guys, break that price down over 5 years. Anything worth doing is worth doing for 5 years. Break that cost down month. What's that monthly cost over 5 years? 5 times 24 months. Divide 5 times 24. Divided by 2,500. That's pennies. You imagine if I had you for 2 hours, 3 hours here. Imagine if I had you for 5 years. What? It's crazy. Just do it. Take the step. I've got you. I promise you I got you. Ask my traders here if I don't have them. I got you. You take this step. I've got you. Every goddamn day, every week, every month, every quarter, every year. Time to join the family, guys. It's time to stop being on the outside. Let's do this right. It is amazing to me how everywhere else in life, we know that you're not supposed to be good all by yourself. We know that every professional athlete had a coach, had a trainer, and 1 or 2 really special ones. We know this. We know that if a lawyer is good, they were trained to be good. They weren't born a good lawyer or a good surgeon. If someone tries to pick up a basketball for the first time in their life and they're disappointed that they're bad, why? You're supposed to be bad. You haven't had time, experience, and any training. We understand these things in other areas of life, but somehow when it comes to your money, sometimes when it comes to the market, the most competitive market in the world, stock market, that intelligence disappears. I can do it myself. How? How? You can't do it yourself in basketball or soccer or being a lawyer or being a doctor or being anything good anywhere else in life. You can't do it like that. But somehow you think you can do it with the most competitive market in the world, with a market in which your players in your competition have billions of dollars. You think without any trading, without any guidance, without any mentorship, without any help, you're going to go into that shark-infested world and take food off of those people's tables? Really? It's crazy to me. I have been at this game for 40 years. I have seen more people come and go in this field than you can shake a stick at. I have lasted. I am still here. And I want to transfer every single thing that I've learned, every single thing that I know to you. And then I want to try to convince you of us going into business together. We trade together. You put your money away. I give you my money. We share the proceeds. No risk. If you lose, it's my loss. That's where the selfish part comes in. So if I can train you to do this right, and you're okay going the riskless route. What's the riskless route? You don't risk a single penny of your family's money. Now, many of my traders have their own account and they trade my account. That's fine. Some traders just trade my account. That's fine. You can do both. But I have a selfish incentive in this because if you trade with my capital, I get a portion of your gain. So I have an incentive to make you good. I have an incentive to pour everything I can into you. I have an incentive because if I make you good, I make more. While I'm on a plane and you're trading, I'm winning. When I'm on vacation and you're trading, I'm winning. When I close my computer for the day and you continue to trade for the rest of the day, I'm winning. That's the selfish side. That's and it's not selfish, that's just the business side. But I'm just telling you, I have an incentive to make you good. And you have an incentive to be good. We hold each other dear. All right? Very powerful combination. All right? Most people are going to pat you on the back after training and do a Hail Mary and send you on your way. That is not what I do. When you come into the family, guys, it's for life. We train every day, every week, every month, every quarter, and it never stops. This is for life. This is forever. One fee, done, forever. All right. Now, I told you I created something called the Accelerator Roadmap. This is a 90-day, week-by-week guide to get prepared for that fourth quarter. You dominate this, you're going to dominate the fourth quarter. No matter which program you buy, this roadmap is yours. All right? This is a bonus I'm throwing in there. All right? Design this specifically to get ready. Get yourself in shape, sharp, and ready for that fourth quarter payoff. All right? That's your bonus. Now, for anyone who knows what they want to do, you've got 60 minutes. 60 minutes to get something very special. Anyone who joins the family in the next 60 minutes, I'm going to work side by side with you, all right, with a complete day of a trading plan session. We're going to lock down step by step your trading plan, a plan that if you follow it, it's an 8-part trading plan. You follow all 8 steps, every single trade. At the end of the 8th step, you will have money 7 to 8 times out of every 10 times you do this. Most people are in the markets trading without a plan. You cannot do that. We're going to sit down together. I'm going to work with you. We're going to structure the plan from A to Z. There will be no stone uncovered, and you will walk out of this session. Let me tell you something. You're going to walk out of this semi-private session, and you're going to have literally a checklist that every single trade, if you put this checklist down and you make sure you check off every single box all the way to the end of the piece of paper, boom, I finish all the checks, you're going to have money 7 times out of 8 times out of every single trade you apply that list to. And that's how you become a master trader. Systematic trading the same way every single time, which a master trade list and a trading plan forces you to do until it becomes natural. There's a point where you don't need a trading plan, but the trading plan is the first part to getting you used to systematically doing the same thing every single time under a variety of different market environments and circumstances. You got to stay the same. And so that trading plan session is going to kick you off the right way. Wow. All right. So sign up in the next 60 minutes. You become one of the participants in that very powerful trading plan session with me. All right. I used to do this for $2,000 all over the world, actually. Firms would hire me to do the trading plan session with them for 800 traders, 1,000 traders of theirs to travel all over the world to do this. So I want you to have that. Now, what you will also get is if you if you sign up in the next 60 minutes and you sign up for the complete package, remember what that is. That is the complete trader program along with the 11-week live trading camp, which is where I personally focus with you on the first 20 minutes of trading. That's the whole package. This whole package is also full funding. You are fully funded for life. It's not something that disappears. For life. You're going to get 60% payout. It's normally 40% payout. I'm going to give you 60% payout on your gains once you graduate, if you sign up in the next 60 minutes. So you go from 40 to 60%. I'm going to give you access to my online training academy. Where guys, just like YouTube, I have hundreds and hundreds of videos that are specifically, these are private, that are on-demand videos that cover every aspect of trading, from moving averages to profit taking to riding a play out, maximizing it for full profitability, initial stops, stop adjustments, everything, proper entries, proper exits, everything. Right, that is yours for life. And we grow that academy constantly. We grow the value of that academy. You're going to have lifetime access to that academy. All right, I told you about the trading plan session that's going to give you the right kickoff. And on top of that, sign up in the next 60 minutes. I'm going to have you with me for a full week of my mentorship program. You're going to join me for this 1 week, and I'm going to mentor you to make sure you get the most powerful start of your trading career. We're going to look at your trades. We're going to dissect them. We're going to correct them. We're going to tighten them. You're going to watch other traders get their trades critiqued, perfected, tweaked. This is very powerful. My personal mentorship program. You're going to be a part of that for an entire week. All right. Make sure you get your start to be the most powerful start. Plus, you're going to get the specially designed 90-day accelerator preparation program. It's a week-by-week program right into the fourth quarter to make sure that you are absolutely prepared and ready to turn the fourth quarter into maybe what could potentially be the best quarter of your life. There's a lot of things in here, guys. I want you to think in terms of 5 years. Anything worth doing is worth doing for 5 years. Are you going to be trading 5 years from now? I hope the answer is yes. If you're going to be trading for 5 years from now, break that cost into 5 years. What's the cost per year? What's the cost per month? What's the cost per week? What's the cost per day? It's not even a freaking cup of coffee. That's how you look at value. You break it down into what's my daily cost to do this over the extended period of time. And I say use 5 years. If you're going to be trading 5 years from now, use 5 years. If you give me 6 months of your life, you will never be the same. Imagine giving me 5 years. It's powerful. All right, so you have, guys, until August 2nd. All right, if you don't make the 60 minutes, you still get the accelerator. So, guys, remember, if you make the 60 minutes, you get the trading plan and the mentorship. There's 1 full week of mentorship and 1 full session of building your trading plan. It's very powerful. All right. If you don't make the 60 minutes and you have to sign up a little bit later, that's fine. You get the academy and you get the accelerator. And you still get the 60% payout. All right, that's powerful as well. So here are your programs, guys. Anything you like broken down into the time frames and the styles of trading. Remember what I told you where my main baby is? That is the complete trader package. That is where I'd say 90% of the people start there. All right? And you can do this. I know you can. Enroll now, guys. Mid-year sale. The next one is not until the end of the year after the fourth quarter. Don't let that go by. Don't miss that. And I do want to let you know, guys, that there are a lot of people out here. I know we live in a digital world today, and this is what we have to deal with. You are forced to be extra diligent and extra careful. I don't want you speaking to anyone that's not a team member of mine. So if they do not have this name, if they do not have this email, if they do not have this number, you are speaking to someone who's trying to take advantage of you. All right? Don't get fooled by that. I need you to check. I need you to double check and to make sure you're dealing with the right person. All right? If they're not on this list, take a snapshot now or come back to this point in the presentation. If they're not on this list, you're being fooled. All right? So be careful. Those are the languages they speak. Everything that I do is in English, Spanish, and Portuguese. So language is not a problem. And guys, there are many of my traders here today. You can ask them if this has not been life-changing for them. Ask them right here, right in the chat. You can ask them. Some of them will answer you. Ask them if this hasn't been the very best thing they've done in their entire trading life. I was shooting in the dark, and now I feel like I've come into the light. David S. He's willing to give up his secrets. It's so hard to find that kind of honesty. I thought I was a disciplined individual until I joined IFT. I can tell there is progress. Do this the right way, guys. It's time to stop freaking playing around. You can do this. Let's do it together. Let's do it as a family. Now, guys, I know that I always say this. There are so many things you could have been doing over the past 3 hours at the mall, walking your dog in the park. I don't know, spending time with your kids, whatever, walking along the beach. You could have been doing so many things, but you chose to be here with me. That is not something that I take for granted. It's something that I honor. I truly honor it. I deeply appreciate you giving me the most valuable commodity of your life, which is your time. And I made a vow a long time ago that anytime someone was willing to do that, give me their time, give me their attention, that I would do my very best to try to give something that has the ability to change their lives. I think, I hope, I believe with all of my heart that what I share with you today is life-changing. What I share with you today can help reward you for the rest of your living days. That was only a small part. Now, we become family members. Just imagine what can happen over the next year, over the next 5 years. It's truly powerful. I do want to thank you all for joining me today. I want to thank you for your patience. All right. I want to thank you for your support. I want to thank you for liking the videos, commenting on the videos on YouTube, and subscribing to the channel. All right. I do this all for you, and I do it with great joy. Thank you once again for joining, guys. Looking forward to a number of you joining the family. For those of you who've already decided, welcome to the family in advance. All right. In the meantime, enjoy the rest of your weekend. I am out. Boom, boom, boom. Ciao for now, guys.